Welcome to Businesso, your ultimate guide to the world of business. We are here to give you the tools and resources you need to succeed in today's fast-paced business environment. From startup to scale-up, we have you covered with expert advice, case studies, and more. From marketing strategies to financial planning, we've got you covered. Join us and be sure to subscribe. We explore the latest trends, share success stories, and provide expert insights. What is car insurance? Car insurance is a type of insurance policy that protects against financial loss. Car insurance pays those costs if the policyholder causes an accident. Depending on the type of insurance one buys, this also helps pay for the repair or replacement of one's own vehicle. Here are some of the costs that car insurance can cover. Repairing or replacing the vehicle after a fire, theft, or other disaster. Medical bills if the driver is hurt in an accident. Lost wages if injuries from an accident stop the driver from working. Losses another motorist causes if they are uninsured or underinsured. Damage to other people's property the policyholder causes with their vehicle. Injuries others experience if the policyholder causes a crash. Rental car expenses if the vehicle is in the shop for repairs. Emergency roadside assistance. Motorists don't have to buy all of these types of car insurance coverage. But they should buy the best car insurance coverage to protect against losses they can't afford to pay for out of pocket. How can I find the best price on car insurance? To find the best car insurance rates, drivers will need to get personalized quotes from different insurers. This is because prices can vary depending on each driver's situation. Drivers should get car insurance quotes from at least 3 to 5 different insurers, and more if possible. There are many websites that make it easy to get multiple quotes at the same time, which makes this process easier. The fastest way to compare multiple quotes is to provide the vehicle identification number, VIN, so that the car insurance company can get the necessary details about the car immediately. Drivers should also make sure they will need money, including for driving or safety equipment, and good test scores for teenagers or family members. How much car insurance do you need? When choosing an auto insurance policy, drivers should look for more than the cheapest auto insurance. They need adequate coverage to make sure accidents don't cost thousands of dollars, which may require higher monthly payments. The amount of car insurance a person needs depends on their circumstances. However, most states have certain minimum requirements. Drivers may also want to purchase additional coverage beyond the minimum coverage required under their state's auto insurance laws. Here are some types of car insurance that drivers may need or want to buy. Liability insurance. Liability insurance covers losses that the policyholder causes to others. For example, if a driver causes an accident, injures the victim and damages their vehicle, the liability insurance will pay for the injury and damage to the person. Most states require liability insurance, both to pay for personal injury and property damage. According to California car insurance requirements, for example, a driver must have $15,000 in injury liability coverage per person. $30,000 in injury liability coverage per accident. $5,000 in property damage liability coverage. Many people may want to buy more than the minimum coverage requirement if they want the best car insurance. If drivers fail to do so and cause an accident, they will be held responsible. If a driver crashes and gets killed, he or she will be sued for millions of dollars. Having only $15,000 of insurance won't do much to protect their assets. Uninsured/underinsured motorist coverage. This pays for losses that the other driver should have covered but couldn't because they were underinsured or underinsured. Without it, the driver involved in the accident and the uninsured motorist or the underinsured motorist may be forced to pay out of pocket for medical expenses and car repairs. A few states require coverage for uninsured or underinsured drivers. For example, in Connecticut, drivers must have $25,000 for personal and $50,000 for accidents and driver's insurance. Personal injury protection, PIP. Personal injury protection, or PIP, pays for the insured's medical expenses and free wages in minor accidents, regardless of who caused the accident. A total of 15 states require PIP. These states are called defectless. People living in no-fault states will use their own insurance to pay for losses after minor accidents. This is true even if it was the other driver's fault. New York is an example of a no-fault state. It requires drivers to purchase at least $50,000 of PIP coverage when purchasing auto insurance in New York. There are also 3 non-default states. There, drivers can choose to purchase PIP insurance or choose a separate policy, commonly known as a full payment policy. A full liability policy still allows a person to sue other drivers, even after a minor accident. Collision insurance. Contract insurance is optional, but it is essential coverage that most people will want to purchase. Remember that liability insurance will not cover everything that happens to the owner's car, even with the best policy. A driver can purchase collision insurance to repair or replace their vehicle in the event of an accident. Comprehensive coverage. Comprehensive insurance is also an option, but most drivers will find they need it. It pays for all the losses of the car other than the car accident. For example, comprehensive coverage pays for window damage or repairing or replacing a car when a tree falls on it. Getting car insurance discounts. Most insurers offer car insurance discounts that can help reduce the cost of auto insurance. Commonly available discounts include accident-free driver discounts. These are available to drivers who have gone a certain length of time without becoming involved in a collision. Discounts for driver monitoring. Motorists who agree to download an app that tracks their driving habits may be able to save. Defensive driving discounts. Completing a state-approved defensive driving discount can help motorists to save. Driver education discounts. Young motorists who complete driver's education can save money. Driver behavior discounts. Drivers who have a clean driving history can save money, as can motorists who don't go many miles per year. Good student discount. Young motorists who get good grades may be able to save. These discounts usually require at least 8B average. Distant student discount. This provides savings on a family's insurance policy when teen drivers are away at school. Bundled coverage discount. Motorists who buy multiple types of insurance policies, such as auto and homeowners insurance, will usually qualify for discounted premiums. Multi-car discounts. This savings is available for people who insure several cars with the same insurance company. Continuous coverage. Drivers who maintain their insurance year after year may find they can save on premiums. New car discounts. These are available to motorists with a late model vehicle, usually one that is less than 2 or 3 years old. Vehicle safety feature discounts. Airbags, anti-lock brakes, anti-theft devices, and other safety features can also result in low premiums. Driver affiliation discounts. Savings are available from many insurers for motorists who are in the military, who work for certain employers, or who are members of certain groups. Pay in full discounts. It's often possible to save on insurance by paying premiums one time per year, rather than taking advantage of the option to pay quarterly or monthly. Online-only discounts. Many insurers reduce costs for drivers who purchase their policy online and manage their accounts on the internet. Paperless statement discounts. Drivers who sign up for paperless statements may reduce car insurance costs. How are car insurance rates calculated? The best car insurance companies calculate rates based on the risk of an accident. Factors that insurers consider include which drivers are on the policy. If a motorist is buying a family policy, insurers will consider the driving record of everyone in the household. Driving record. Insurers consider accident history and risk of speeding tickets. Number of miles driven. A car that is driven more frequently is more likely to become involved in a crash. Type of car. Vehicles more prone to accidents or theft will be more expensive to insure. Vehicle safety features. If a car has features that reduce the risk of theft or the chances of a crash or serious injury, this will result in lower premiums. Credit score. Drivers who have a stronger credit history will often pay less for insurance. Your support will help us continue to produce high-quality content that will benefit the business community. So, don't wait any longer, hit that subscribe button, share our videos with your friends and family, and give us a like. We'll see you in the next video. Thank you for watching.